You're watching Coping with COVID-19. I'm Haley Wooden. Today, we look at some of the trends and shifts in the global economy as countries turn their attention to reopening their economies to some extent. My guest today is Karl Schamotta, Chief Market Strategist at Cambridge Global Payments. Karl, thanks so much for coming on the show.
Thanks very much for having me.
What kind of pace of economic recovery are you expecting to see, or are markets expecting to see right now?
I think the key right now is that we're all looking for sort of a Nike swoosh designed recovery. Um, essentially a sort of fall off the cliff up front, but ultimately that we move back something like this. A more gradual climb back, not sort of a immediate rebound, but something that takes a year to 2 years to unwind, and that has sort of a lot of setbacks along the way. So a very, very uncertain future for businesses and consumers.
And what are some of the trends or factors that are really going to hold back or are expected to hold back economic recovery? I imagine, for example, consumer confidence or people losing their jobs might be some of those factors.
Absolutely. So you have right now essentially a global economy that is in sort of a frozen state. The key here is we're going to see various parts of the economy thaw very, very gradually. And so you might see, some parts rebound relatively quickly. For example, large institutions, governments, and things like that, where salaries are, steady and the income stream is there. But in other areas of the economy, that is not going to happen. You're going to have a large number of consumers who have lost all or most of their income, and are not spending any longer. We have, of course, an entire society that will be afraid to go out and socialize with other people, which is going to impact, the hospitality sector. It's going to impact restaurants, going to impact air travel, all of those areas that, have helped to drive the economy in years past. So, you're looking at something where you're going to have a lot of negative effects. But at the same time, it's kind of important to highlight that we might have a large sort of retooling happening at the same time, right? You might have the hospitality sector re-gearing how it operates, the delivery areas of the economy amping up and becoming sort of more permanent features of how we do business, and workplaces retooling. So, for example, where I work, we're looking to retool the office and institute new measures that we didn't have before, and that's going to require investment. So, the sort of sum total of that is that you're looking at a gradual climb back, but some bright spots amid all of the gloom.
Absolutely. Any sectors or industries that might experience a major collapse from which they can't recover? I'm thinking, for example, and not that they're a full industry, but Airbnb, for example, is such a big part of our economy prior to this. I wonder if people might be really concerned about, say, staying in someone's home for health and safety reasons. Are there any concerns about things that we have had that might not exist post-COVID?
Yeah, I think that Airbnb is going to be permanently impacted. Travel overall is definitely going to slow. Even corporate conferences are going to slow materially. It's very unlikely that large companies are going to send large numbers of employees around the world to meet with others and potentially come into contact with something infectious. But the other side of it, all this is that the four most expensive words in the English language are "this time is different." Over and over and over. If you look at human history, when something hits, we decide, everything's different now, and we're never going to go back to, how we functioned before. And the reality is that in almost every single case, humanity reverted back really, really quickly. And I think that's basically because we have the attention span of a goldfish. Human beings just simply don't remember things for very long, and we get tired of doing things in a certain way very, very quickly. So, what's interesting right now is actually seeing some of the data on driving patterns, on going outside and things like that, and you're seeing a lot of that rebound across the Western world. So it suggests that a lot of people are really reverting back to what they used to do, and that's likely to continue in the months ahead.
That's interesting. If we consider, say, a very optimistic scenario and the economy rebounds much faster than anyone's expecting, what are some things to watch for and some potential implications of that?
Yeah, I think that's a really good thing to talk about because, right now the consensus is that things are so terrible and that the recovery is going to be so slow that that people are sort of avoiding investment. They're not functioning as they once did. And the question here is, what if that is incorrect? What if, we suddenly do rebound in some way? What if economies reopen and people go back to doing what they were doing previously? Could we see a different sort of economy come out of that? And I think quite possibly, yes. One of the things that could happen is that financial markets could loosen up materially. We could see asset prices rebound in a more pronounced fashion than we have. We could see the U.S. dollar fall. So the U.S. dollar has risen very rapidly as safe haven buying has lifted. And in other words, everyone in the world wanted the safest asset that they could find, and that was the U.S. dollar. If the situation reverses, we could see the US dollar fall. And if that happens, then you see other things rise in sort of opposition to that, like the Canadian dollar, like oil prices, commodity prices more generally. And if all of that were to happen, you're actually looking at a new round of volatility in the financial markets. This is sort of essentially the one thing that no one expects right now is a positive outcome.
Kind of that black swan event, almost important to keep it in mind at the very least, just
Absolutely.
in case we see that. You mentioned oil prices. Of course, it's been absolutely amazing to see what's been happening and devastating for so many companies and individuals employed by that sector. Any relief whatsoever for the North American oil sector on the horizon?
Oh yeah, I think right now we are already recovering from where we were. The global economy suffered a massive demand shock. We saw a collapse in commuting around the world that weighed on fuel consumption, and that sort of drove a massive imbalance between the producer side and the consumption side, and those two sides are sort of coming into alignment right now, and you are beginning to see oil prices recover. Now, we're not going to recover to levels that we saw a couple of years ago. And so what that really does mean is that you are looking at a oil and energy sector overall that is far smaller than it has been. And that's a terrible adjustment for many people in the sector. And it's something that I suspect we're just simply not going to recover from in the next decade. And I guess one thing to kind of highlight there is that the big factor here in recent years, the thing that sort of precipitated this big problem, was the growth of the shale sector in the US and Canada. And that remains relatively intact today. So if we were to see oil prices suddenly recover, if we were to see, sort of break even rates converge with reality, we would see shale production coming back online. And so what that sort of means is that ultimately it's very hard for prices to rise a lot. That it's a situation in which if prices rose enough, production would rise and bring things into balance. So that means that sort of boom cycle that we've seen lift the Albertan economy a couple of times in the last 2 decades may be over for now.
Interesting. I imagine that you and your colleagues have gotten so many calls, emails, requests for information from investors over the past couple of months. A lot has happened in the markets. Generally speaking, what's the message to investors at this point in time who are maybe looking at all of this uncertainty, but still trying to make concrete plans for their financial futures?
Yeah, I think the thing that we are always recommending to our customers. Our customers are mostly corporate. What they're always looking to, or what we're always really recommending, is to stay safe and kind of keep it simple. The key going into this crisis was that a lot of businesses and households had become terribly over leveraged. They had borrowed too much, and that means that any little surprise can completely derail you. And that's sort of where a lot of all of this sort of I guess the dominoes are falling right now, is because these companies and individuals had borrowed too much and just simply don't have a margin for error. So today what we're really sort of emphasizing is that it really makes a lot of sense to build up that balance sheet, to pay down the debt while you can, and to plan for a brighter future ahead in the longer run. Don't sort of shut up shop and assume that this situation is going to prevail forever. But definitely try and protect yourself while it does impact the global economy.
Hmm. You mentioned we suffer from short memories at times. Does that apply to the corporate side of things? Do you think we'll see maybe a hesitancy for the next couple of years on investing or really putting yourselves out there, putting your balance sheet out there, taking on more debt? Or do you think that it's possible we see companies spring back and kind of forget what happened and move on with their plans?
Yeah, I get it's kind of a complex situation here. So, first thing to kind of talk about is that there's a lot of research showing that when we see uncertainty levels in the economy rise, we tend to see a drop in investment. So, we see companies sort of pull back on their plans to hire, to build new things, to invest in R&D. All of those things get pulled back, and that effect tends to sort of last at least 12 to 18 months. And I think this time around you're looking at least 2 years in which companies pull back on all of those investment plans and behave more cautiously. However, there's one really big ingredient to bring into that, and that is that although uncertainty is high and companies are going to feel more cautious, the reality is that financial conditions have loosened so much that it makes a lot of sense to go out and borrow money right now and to invest. So with central banks like the Federal Reserve, the Bank of Canada, pumping money into the financial markets while governments spend at an unprecedented rate, that's going to really sort of tilt against that uncertainty and potentially help to balance it out a little bit. So I guess long story short to that is that we really don't know how companies are going to behave. They may actually take that hint from the fiscal and monetary response and actually amp up the spending at some point.
Hmm. I know a lot of people are looking to China to see how China's recovery is going and seeing if they can take any lessons learned there and apply it to what may happen in other countries. What are you going to be watching in the weeks and months ahead to inform sort of your strategy and what you tell investors?
Yeah, that's a fantastic question. I'm always a very avid China watcher, but the problem that we have right now is that China did not suffer the same sort of consequences that we're seeing elsewhere in the world. Um, par- Particularly, I guess, when we look at the employment side of things, because the number of folks that were sort of laid off during this crisis in China has been much smaller as a proportion of the population than we have seen elsewhere. Also, the shutdown was much more extreme and shorter lived than what we're seeing in North America and Europe, largely because Chinese authorities figured out what was happening and are sort of in a political position to shut things down very quickly. So, as a result, the Chinese economy is bouncing back quite rapidly. We're seeing most sectors recovering back to pre-trend or pre-crisis growth trends, and that cannot be extrapolated elsewhere in the world. We don't have the same situation elsewhere. We're not going to be in the position to immediately see commuting levels return. White collar workers are not going to be going back to work anytime soon. And so, I think when we look at China, we can't necessarily extrapolate its lessons. The one thing that we can say, though, is that if you look at the average Chinese consumer, they're back to doing pretty much what they were doing beforehand. So potentially that's something that we could look at is, does the psychology shift more quickly in North America than we currently expect?
Interesting. Karl, a pleasure having you on the show. Thanks so much for coming on with your insight.
Thanks very much for having me.
That's Karl Schamotta, Chief Market Strategist at Cambridge Global Payments. This has been Coping with COVID-19. I'm Haley Wooden. Thanks so much for watching. We will be back on Monday with a new video.